Joining us now, Matthew Aks, Evercore ISI senior strategist. So we've obviously been talking about that this is a too close to call race. We have seen the so-called sort of Trump trade come to the fore over the last couple of weeks. But in the clients that you're talking to, what are they expecting? Or are they sort of looking at the long term and trying to look past the election?
Yeah, well, thanks for having me. I think there are a few clear spots where you're going to see major differences between Trump and Harris show up quite quickly. These are areas where a president has an ability through regulatory policy to affect changes pretty significantly right off the bat. So sectors like energy, healthcare, and financials, that's where I'd expect to see it in the near term. And then if it is Trump, I think we'd be looking at big kind of structural shifts around tariffs, around immigration, which would really be big macro drivers in 2025.
Regardless of who wins, Matthew, do all roads lead to higher deficits?
Yeah, as we've done the math and kind of added up the numbers, we do think under most outcomes, the deficit is going to be higher. Today, this past fiscal year, the U.S. deficit was around 6% of GDP. That's already quite a high level. But, if you think about Harris negotiating with the Republican Senate, Trump potentially having full control, we see a lot of pressure in either of those negotiations, the way those play out, pushing towards higher deficits. And really the context for that is the expiring Trump tax cuts. This is about $4.5 trillion worth of tax cuts that expire at the end of next year. Harris has pledged to extend most of them. Trump would extend all of them. So really right out of the gate, you're starting with a pretty high tab, and then it likely only gets higher from there.
Where does it seem like people are maybe overextended in this race? In other words, where is there most potential for gyrations in the event of a surprise?
Yeah, I think one interesting area we'll be watching closely over the next couple of days is clean energy stocks. I think clearly Harris is better for clean energy, offers more clarity and certainty around the future direction of the IRA, future direction of regulation. But we also think that, we're in an environment where electricity demand is really, really high on account of demand from AI and data centers. And so I think either way, whoever wins, the next president is going to have to adopt something of an all of the above energy strategy, where really they can't afford to be picking favorites or less, favored areas of sources of energy versus less favored. We need to get as much energy as we can on the grid here, kind of in the near term. And so I do think if Trump wins, you could maybe see some sentiment going against clean energy stocks. But in the end, those stocks, especially solar, may continue to see strong growth over the next several years, as they have over the last few.
And Matthew, there's this view out there, I'm sure you've heard it, that Trump would offer more positive regulatory environment, regulatory backdrop. And, some analysts who believe that say, that's why they think Trump, might be a positive for big tech, mega cap tech. Do you agree with that? You buy that line of reasoning?
Yeah, I mean, when we look at it, I think we see a few clear areas where Trump, if he won right off the bat, could take regulatory actions that impact specific sectors. I think the clearest example would be in financial regulation, where he'd pretty clearly be able to put his stamp on things like bank capital, things like consumer financial protection. So that's sort of the first area I would look. Certainly, I think if Trump wins, you're going to see an easier environment for M&A overall. You may, as you suggested, see less scrutiny on big tech platforms that have faced a lot of antitrust scrutiny under the Biden-Harris administration. And then also, I think another area that folks talk about is energy. Trump has talked a lot about trying to do stuff for oil and gas. I think we see that as continuing to be more of a global market. So maybe there are things Trump can do in terms of regulations on the margins to help oil and gas. But overall, we see that, I think, being really dominated by the global market and global market forces.
And then when it comes to sort of macro as well, whether we talk about tariffs or things like what Trump has proposed on immigration, on the immigration front specifically, there has been some economists talk about that creating a knock to GDP. But if you're trying to sort of trade that, I don't know if there's a way to do that or how you view that as being important then in terms of the read-through for the markets.
Yeah, it's a great question. I mean, I think what it means is certainly less potential output in the U.S. Coming from a smaller labor force. slower growth in 2025. And I think you would need to kind of flow that through to how you thought about the deficit, how you thought about interest rates. So it's definitely a macro area. Certainly, if he did kind of key in on restricting immigration in certain industries, agriculture, maybe also the tech sector, if you're looking at high-skilled immigration, there could be some sector-specific impacts there as well.
Matthew, great to have you on the show. Thanks for joining us.
Thanks for having me.